What do you guys think about Wednesday? And no, I'm not talking about the unconference, but maybe the unconference coupled with what many are expecting to be a rate cut. There's a lot of loud voices out there saying that rates should have been cut quite a while ago. If you look at true inflation, if you look at other ways of measuring what's really going on, and what does that mean for all asset prices? I mean, the stock market's already at all-time highs. So where do you guys think we go from here? Higher?
Higher for asset prices, lower for rates, and to me the bigger macro picture here is just what's going to play out over the next couple years of likely job losses through AI or job weakness through AI advancements, coupled with likely not as weak of an economy as you'd think on the other side. And so because it's being met with productivity gains, and so typically when you see labor cuts or large labor cuts, it's because of a recession and people are having to do cost cutting measures. Here you're seeing job cuts with productivity gains at the same time. And so it kind of throws a wrench in most economic modeling and scenarios, and is one that should be one that generally drives prices down. So inflation. So if you think about the Fed's dual main mandate, on one hand, inflation, pretty under control. On the other hand, a weak labor market, it should mean lower rates and pretty, potentially pretty material lower rates is where I think it should go. I don't know that how quick that they do that, but I think that's a macro environment that probably is fairly supportive for risk assets and particularly Bitcoin. So I think it's all hands on deck, and I think there's gonna be a little bit of change people have to work through, but ultimately I think it'll be my view is it'll be a good thing over the long run, as I think people's standard of living will rise, and hopefully people can support families with one person working is kind of the long term view, but that's not where we start. It's going to be messy.
Well, it's also interesting that there's the rumblings of them declaring the housing crisis kind of in this same cycle. And so you've got asset prices that are already high. You've got markets that are ripping. Now you've got rate cuts coming in, and a lot of people think they're behind the ball and need to cut harder. Couple that with housing affordability and them declaring a housing crisis to try to drive down the cost on those houses. I mean, there's a lot of dynamics that are going to be at play here over the short and the midterm, but I think that Matt's right. I mean, in terms of what's the impact of this going to be on asset prices, I think it's going to push them higher quite quickly. I mean, I think Q4 here, if we don't see multiple cuts, or if we do see multiple cuts, I think you're going to see risk assets in particular start to fly.
And it's like tone too. It's not just like the cutting, it's how if they're hawkish or dovish, how they say good afternoon and the other things that they talk about. But yeah, I mean, what was there? The largest jobs revision in history last week, like 900,000 jobs they said were there that didn't exist, which is just a massive number. And it kind of confirms the reality that everybody's been seeing in the world, right? There's been pain in a lot of different industries. A lot of people can't get jobs, they lose jobs, they can't get jobs. And yeah, I think it's starting to make a little bit more sense with what everybody's actually seeing in the real world. So yeah, hard to see a world where asset prices don't keep rising here.
It's also interesting though when you see, I think it was what 911,000 or something was the revision on the jobs numbers. But when you look at that and you start to see these revisions becoming more frequent, you have to imagine that the market's starting to wonder what data are they using to make this decision now, right? If a lot of the data has been wrong for a very long time, where does that put them right now? Are you in this period where you still need to be a little cautious because you're trying to stabilize this and find the right data sources to give you the best chance to make the right decision? So do they wade into this like the betting markets think with a 25 basis point cut? Or do they see that job revision number and go, we're behind the eight ball, we need to do a 50 right out of the gate? It becomes an interesting conundrum given, how volatile the data's been that they've been utilizing for so long.
I think they've known the whole time.
Okay.
I think they've known the whole time. personally, but I don't I have no data to back that up, but it's I don't know. You could see it everywhere. Like you can see it in society that the numbers are wrong. Everybody's been talking about the numbers being wrong. You go look at inflation, you go look at sentiment everywhere. Everything is painful. Jobs are painful, housing prices are painful. Uh yeah, so I feel like they already knew, but it'll be interesting to your point to see how they respond to this. If it's a what I think 90, what's the Bloomberg says like 96%, 25 basis point rate cut is the probability. I think of a 50, it's like something like 10 or 15%, much lower.
I think we're up to 105% likelihood of a cut.
Okay, 105.
So
Okay,
specifically what that
higher.
means, some people are pricing in a potential for 50 basis points.
Got it.
And it kind of breaks once it goes above 100%. But it doesn't actually mean 100% confidence. Obviously, it just means that some people are pricing in a 50 basis point cut.
Yeah, makes sense. It's like a weighted average.
Mm-hmm.
Yeah, got it.